Hi traders, I hope you're well. Adrian from Trade Uni here. Just going to go through some of the daily analysis that we're seeing, and boy, we've had some market reaction recently after the Trump or US and Israel strikes in Iran, making it very difficult for markets to gain any confidence. And you've seen that with the volatility and the lower moves in the equity markets Monday and Tuesday. But what we can see is when I look at the markets, I'm looking for structure. I tend to use a 4 hour chart really because it hones in nicely, focuses in on a day-to-day activity. And in Eurostoxx here, we can just see what was the market telling us last week. Well, it was hitting this upper equidistant channel resistance, kind of got that closing the bears out, that fear of, oh no, everybody's short, it's going to new highs, new highs, new highs. But it did actually re-enter. Okay, and that was giving us a clue that maybe this thing has gone far enough. And you know, we don't know what news is pending and coming out, but we know the chart structure, this historic repetitive pattern, is really neat. Is really going nicely, and we know chart structures break, and we've had this breakdown here, obviously, yesterday during that kind of the news being digested, that markets are now going to be extra volatile because there's a new conflict in the Middle East taking place. So nobody likes uncertainty, and obviously, yeah, the markets take a bit of a respite. What we do know is that in previous big pull downs like this, the markets have rallied quite sharply and aggressively. So I guess it depends how long this conflict is going to last, and obviously what the outcome is going to be as well. But really want to focus on just be aware of chart structure and don't be scared to trade that structure and trade what you see within like conservative risk management. Don't overcommit funds, don't gamble, anything like that. Make sure you're doing your analysis, you're keeping it clean, and you're actually trading on that analysis. I look at momentum. I like those little dots which are called parabolic SARs, stop and reverses, and simply, to our students, we just guide them that this is the structure. Watch out for something. Something could be happening. Let's position ourselves accordingly. So that's EUROSTOXX, how we see that at the moment. Probably it's now below the 200-day, this moving average, this line here. It's probably moved a little bit too far too fast. But again, we've got big geopolitical things going on. So we need to be very cautious while this is all going on. So pretty much let the markets digest the noise and let them come back to your strategy, your plan, and then to re-enter those trades. But a really good short opportunity last week that our students were guided with. I'm going to go through euro dollar now because it had been one of strength earlier on, beginning of the year, but that had pulled back, but has since pulled back quite nicely. We had this high here established, I think, at the end of January. We had that pullback. Can you see how this yellow line here, the 200-day exponential moving average, acts as support? We get this high, this lower high, all right, and then we have this kind of more price action around the 200-day moving average. That's problematic. That could be showing, there may be there's a little bit more downside to have. We've got this kind of wedge pattern here that's broken down, and that would have been your sell trigger here for us is 117.736. You're now trading at 115.992. Happy days. That's a good profit to be banked in that. Just over a few days as well. Again, you had dollar strength on the back of that conflict cracking on, so obviously euro dollar had weakened. You might say, well, Aid, where's does a trend line go? I don't really like that as a trend line because you've gone from the high and it doesn't really interact. I'd probably pull it down. I'd like to try and get all price action touching because you need 3 valid touches for a valid trend line, and something like that might seem to be better, or maybe even pull it a bit lower. But I would have thought something like that is going to be where we get these lower highs established after the recent high. All right, so very clear, very tidy in your analysis. Wait for those triggers to happen. All right, and don't be scared to pull the trigger and trade. Yeah, we know as traders we can go long and short, and when things are looking weak, why not sell it and try and buy it back cheaper? That's the way to do things. So what can we tell you is price action supports at the 200-day moving average. So you've got this high, lower high, then you've got this other support, which is looking maybe a little bit suspect as it closes below, then goes back above, and it's probably creating a little bit of noise as this structure plays out. This nice wedge structure plays out, then breaks down. I mean, look at that. I mean, you couldn't have got a better entry or a better higher probability entry based on that chart structure. So very important to understand your analysis and to learn how to build chart structure, how to create chart structure, and how to trade it. So last one I looked at obviously was crude. And again, do you remember how we're showing you that kind of pattern here of that 200-day moving average? Look how important that is when this is happening. Okay, very important that that 200-day has now created. Trying to make that a little bit wider for you there, make it a little bit tidier from the previous trading. But again, January, we broke to the above the 200-day. It held. Bosh, off it went. And again, this level here on the flip of that parabolic, you could have had a kind of, I would put my buy in blue and say, look, around that level where we could have got in. You could have got in here. You could have got in long here. Could have gone long here, here, here. You would have taken a long there, whether you had held that while it pulled back, but maybe the 4 or 5 I've shown you, we're winning 4 or 5 out of 6. Happy days. But that was our last entry, which has really, done well. And it's broken. This was obviously the high from when the markets opened yesterday morning here. And obviously it pulled back and then came, has gone good again. So good structure in place. And really as well, we look at the MACD, which is at the bottom here. That's now turned positive at that level here. So, anywhere around that candle, this one here, you could have looked to get in. Even if you got in at the top there, you're still handsomely rewarded with decent profit and a decent move. And we don't know the news that's coming out, as I said before, but here the chart is telling us what we need to look at. Our strategy is telling us we need to be long. Obviously, the geopolitical news announcement that came out supported the technical case for a long trade. And obviously, up it went. And how well did that go for us traders? So make sure, again, when you're trading, you've got everything in place. You're looking at the right things at the right time. Okay, so everything that we've given you there, it's really important that you learn how to do this properly with a professional and don't just kind of guess and estimate with the things that you're looking to do. All right, so really it's not about where we kind of won and lost here. The important part is the process. Of course we want to win, of course we want to do things properly, and the end aspect is monetary, for sure it is. So I just come in every day with this structure and trade it as we go, as I see it during the day. So, and this is really what makes a good consistent trader, and really one that's going to stay in the market, stay profitable for longer. So hope you enjoyed that session. It's all about building that structured approach. Everything that we've shown you here is of that structured approach, and there is a consistency behind our methodology. So I said, again, hope you enjoyed it, and I very much look forward to seeing you tuning in to the next one. All the best, traders. Take care.